What's happening in the world of tech and business? The news cycle is moving at lightning speed, and you need the inside scoop to stay ahead. Get ready for the unmissable updates that matter most right here on Qualcomm Pulse. We're diving deep into the stories shaping the future, from market-moving financial news to groundbreaking acquisitions. Stick around, because you won't want to miss a single second. First up, how did Qualcomm's latest earnings stack up, and what's the deal with that Apple connection? Then, we've got a major institutional player making a big move. Plus, a massive acquisition is set to shake things up. And finally, we're looking at AI and auto bets that could redefine the industry. All that and more coming up next. Don't go anywhere. Qualcomm's earnings resilience amidst Apple uncertainty. Qualcomm has once again demonstrated its financial fortitude, reporting quarterly earnings that surpassed market expectations. The company announced a robust revenue of $10.9 billion and an adjusted earnings per share (EPS) of $2.85, both figures exceeding consensus estimates. Furthermore, Qualcomm provided financial guidance that aligned with the projections of Wall Street analysts. However, despite these positive financial indicators, the company's shares experienced a notable dip of 6% in after-hours trading. This market reaction underscores a persistent investor apprehension stemming from the anticipated separation from its long-standing partner, Apple, and the broader implications of ongoing tariff risks in the global economic landscape. While Qualcomm actively pursues a strategic diversification strategy, expanding its footprint into the burgeoning PC and Internet of Things (IoT) markets, the specter of its past legal entanglements continues to cast a long shadow over investor sentiment. The company is still navigating the aftermath of a settlement related to past anti-competitive practices, a legal overhang that, despite the strong financial performance, prevents a full market embrace. This situation highlights a critical juncture for Qualcomm, where its future growth potential is being weighed against the lingering effects of historical business conduct. Investors are keenly watching how the company balances its innovative drive with the need to fully resolve past issues and solidify its market position independently of its former key customer. The market's reaction, with shares slipping despite strong earnings, clearly indicates that the Apple relationship's end and the associated legal history are significant factors influencing investor confidence. While analysts acknowledge the company's efforts in new sectors like PCs and IoT, the unresolved issues from the past settlement are seen as a persistent drag on valuation. This creates a complex narrative for Qualcomm, where present performance is strong, but future valuation is tempered by historical liabilities and strategic shifts. Hold on tight, the market's pulse is beating fast. Next, we're looking at a massive institutional investor making a significant stake in Qualcomm. Vanguard's growing influence and Qualcomm's persistent overhang. Qualcomm has captured significant attention with the disclosure that the Vanguard Group has amassed a substantial stake in the company, now controlling over 115 million shares. This holding represents a commanding 10.68% of Qualcomm's common stock, as revealed through a Form 8.3 filing. The disclosure also offered a glimpse into Vanguard's recent trading activity, indicating a balanced approach with both purchases and sales, reinforcing its position as a major institutional influencer in Qualcomm's journey. This substantial investment comes at a critical time for Qualcomm, as the company actively progresses with its significant $2.4 billion acquisition of Alphawave. Despite these strong signals of institutional confidence, a persistent overhang continues to affect Qualcomm's market perception and valuation. The company is still dealing with the lingering impact of a past investor settlement, which was tied to allegations of anti-competitive practices. This historical context, even with Vanguard's considerable backing and the strategic push with the Alphawave acquisition, continues to weigh on investor sentiment. The market is closely observing how Qualcomm manages these dual narratives: the present-day institutional support and strategic growth initiatives, juxtaposed against the unresolved legacy issues that have historically impacted its stock performance and investor confidence. The substantial stake held by Vanguard suggests a belief in Qualcomm's long-term strategy and its ability to navigate these challenges, But the market remains cautious until the historical overhang is fully addressed. The market's reaction to this news is largely focused on the dual nature of the developments. On one hand, Vanguard's increased stake is seen as a strong endorsement of Qualcomm's future prospects, particularly its diversification and acquisition strategies. Analysts are noting that such significant institutional backing often provides a stabilizing effect and can signal confidence in management's direction. However, the persistent mention of the past investor settlement continues to be a key point of discussion. Many believe that, until this historical issue is definitively resolved and its impact fully mitigated, Qualcomm may struggle to achieve its full valuation potential, even with strong operational performance and institutional support. But is institutional confidence enough to overcome past shadows? Get ready, because the next development involves a massive acquisition that's sending shockwaves through the industry. Alphawave acquisition fuels Qualcomm's strategic growth amidst lingering concerns. Qualcomm has ignited market excitement with the announcement of a definitive $2.4 billion all-cash agreement to acquire Alphawave, a prominent UK-based chip designer. This strategic move is a clear signal of Qualcomm's ambition to bolster its presence in critical growth sectors, specifically targeting the rapidly expanding data center and artificial intelligence (AI) markets. The acquisition's impact was immediately felt in London trading, where Alphawave's stock soared by over 23%, reflecting strong investor approval of the deal's terms and its strategic alignment with Qualcomm's forward-looking objectives. This acquisition represents a significant step in Qualcomm's ongoing efforts to diversify its revenue streams and reduce its reliance on traditional smartphone markets. However, even as Qualcomm celebrates this substantial growth-oriented acquisition, the company continues to grapple with the persistent shadow of its past investor settlement. This settlement, linked to accusations of anti-competitive practices and issues with financial reporting, continues to be a point of concern for investors and analysts alike. Despite the positive momentum generated by the Alphawave deal, the unresolved historical issues act as a lingering overhang, tempering the market's full enthusiasm. Stakeholders are closely monitoring how Qualcomm integrates Alphawave and leverages its technology, while simultaneously addressing the reputational and financial implications stemming from the past settlement. The success of this acquisition will undoubtedly be viewed not just through the lens of market share gains in data centers and AI, but also through Qualcomm's ability to fully move beyond its historical legal and financial challenges. The market's reaction highlights a duality: immense optimism surrounding the Alphawave acquisition and its potential to propel Qualcomm into key growth areas, contrasted with a cautious undertone due to the unresolved past settlement. Analysts are pointing out that while the $2.4 billion deal is a bold and potentially transformative move, the market's perception of Qualcomm's overall stability and future trajectory is still being influenced by the legacy issues. Investor sentiment suggests that the company needs to demonstrate a clear path to resolving these past concerns to fully unlock the value of its strategic initiatives, including the Alphawave acquisition. This deal is a game changer, but will it be enough? Stay with us as we shift gears to explore Qualcomm's strategic bets on AI and the automotive sector. Qualcomm's strategic pivot: AI and auto bets drive future growth amidst shifting market dynamics. Qualcomm is making significant strategic plays, focusing its future growth on the burgeoning fields of artificial intelligence, AI, and the automotive sector. These sectors represent key areas of innovation and expansion for the company, moving beyond its traditional stronghold in mobile communications. By investing heavily in AI capabilities and automotive technologies, Qualcomm aims to solidify its position as a leading provider of advanced chip solutions for a diverse range of next-generation products and services. This strategic pivot signals a proactive approach to market evolution, anticipating the increasing demand for intelligent and connected systems across various industries. Despite these forward-looking investments, a notable observation in the market has been a slide in Qualcomm's trading volume, which has reportedly fallen to the 109th position. This decrease in trading activity, while not directly tied to the company's strategic direction in AI and auto, could indicate a period of investor consolidation or a wait-and-see approach, as the market digests Qualcomm's long-term plans and the broader economic climate. The company's success in these new ventures will be crucial in offsetting any potential slowdowns in its core markets and in overcoming the lingering effects of past settlements that have historically impacted investor sentiment. The market's attention is divided between Qualcomm's ambitious strategic vision in AI and automotive and the observed dip in trading volume. Analysts suggest that while the company's focus on high-growth sectors is commendable, the reduction in trading volume might reflect investor caution or a lack of immediate catalysts. The community is watching closely to see how effectively Qualcomm can translate its technological prowess into market share and profitability in these competitive new arenas, especially considering the need to fully regain investor confidence and move past previous overhangs. Will these future-focused bets pay off? That's a wrap on today's top stories, but we're not done yet. Qualcomm beat earnings, but Apple risks linger. Vanguard boosted its stake significantly. The Alphawave acquisition is a major growth driver, and AI and auto bets are shaping Qualcomm's future. That's all for today on Qualcomm Pulse. Don't forget to like this video, subscribe to the channel, hit that notification bell, and let us know your thoughts in the comments below. Follow us on all social platforms for more exclusive updates. We'll see you next time.